Welcome back to our intermediate financial accounting class. Over the last few segments, we've been talking about property, plant, and equipment, and specifically about depreciating that property, plant, and equipment. In these couple of short lectures, we're going to talk about the other part of our discussion of long-term assets, and that is our discussion of intangible assets. Now, we're not going to take a lot of time on intangibles because the basic idea, the basic structure, the basic way we treat them looks exactly like PP&E. There's just a couple of minor issues that we need to discuss where they are different. So this will be a little bit shorter, a little bit more direct than our other discussions, and hopefully you can take those same ideas for straight line depreciation and the basics of capitalization that we've already discussed and apply them to intangible assets. Now, why are intangible assets so important? Well, these are some of the most important assets that companies have nowadays. They're not physical assets, but they're intellectual assets, and copyrights and patents and trademarks and company logos and goodwill have all become bigger and bigger business over the years. Why? Well, because we're moving more and more into an information society and doing less and less with manufacturing. As long as we can manufacture items more cheaply overseas, then what we'll provide in this country will stay more intangible than tangible. So that's what makes this topic so important. The other issue that's important with intangibles is the fact that we really just don't see them much on our financial statements. See, here's the problem with intangibles. I don't know that they're going to work out. This is not like building a machine or a factory or buying land that you can see and touch and use and at least sell for scrap metal. This is an idea we're trying to generate. And I don't know if my idea is going to pay off. So as I start producing, let's say, a new medicine, and I put a bunch of money into research and development and trials and tests and legal hoops that I'm trying to get through, I don't know that any of that's going to turn into a good that I can actually use. So, according to FASB, if I'm not producing a real good that I'm sure I'm going to get to use, I can't capitalize any of those costs. They all have to be expensed, and we see them all going to research and development expense. I can't start capitalizing anything unless, number one, I'm sure it's going to pan out, which means I've virtually completed all of the work, and I end up only capitalizing the legal fees and maybe a last set of tests, and that's it. Millions and millions of dollars, and I capitalize maybe 100,000 of it, and that's it. Don't see very much. The other option is that I buy this asset from somebody else. So I know it's a useful patent, I just bought it, and I have a market value and I know what it's worth because I bought it already completed. So I don't see very much in intangibles because there aren't many costs capitalized, and a lot of people that have good solid ideas that they've already developed keep them and earn the money from using those patents or those copyrights themselves. So we just don't see as many intangibles as we probably should in financial books. And so we need to be able to understand what does go in and what they do consist of so that we know what we're not seeing as opposed to what we are seeing on a set of financial statements. So let's talk about a few basics about intangible assets. First off, these are assets that we're going to use for an extended period of time, just like PP&E. They just don't have a physical presence, but we're going to use them to generate more profit or to help us design a product that we're going to use, or we're going to sell this idea to other people. So we're using this intangible asset to generate profit. Like property, plant, and equipment, we record them at either the purchase price or the direct cost of creating the asset, but like we just discussed, there's not a whole lot of those once we get to the point where we're sure this is going to turn into an asset and not a dud that just has to be thrown away. Now, just like with property, plant, and equipment, we typically have to amortize or depreciate away the costs that we put into these assets. Now, it's a little bit more involved with intangibles than it is with property, plant, and equipment. First off, when we create this intangible, we have to decide whether it's limited life or indefinite life. Indefinite life means it's going to be worth something forever. So I don't have to amortize it away. If it's limited life, it means it has a set life cycle and I can depreciate whatever I've invested into this asset over that life cycle and then sell it or discard it or just have it fade away because that legal protection for my idea is gone. Now, there aren't a lot of assets that qualify for indefinite life. We'll talk about a few of them as we go. A lot of times we think about that the first time and go, now wait a minute, nothing is indefinite life. Oh yeah? What about the golden arches? Can you imagine not knowing what the golden arches mean? They become part of our culture for so long that essentially they have indefinite life. Well, like PP&E, if it has a limited life, we're going to depreciate it. So let's talk about a few examples, and we're just going to run through 5 or 6 different categories of these intangible assets. First are marketing-related intangible assets. These are materials that promote services or products that we provide. So trademarks, trade names, company names, the golden arches would fit into this category, etc. These are indefinite life names. Think about Monopoly as a name. Everybody knows what Monopoly is. Walmart and its classic logo. That's one of these intangible assets. Now the difficult part with these is that I'm not sure when I've created something that fits into this category until it's already done. So the golden arches, the Monopoly sign, the Walmart sign, etc., all of those things, they don't show up anywhere because I don't know what they're really worth. So we have them, they're worth a lot of money, but unless I buy them from somebody else, I don't really know what they're worth. So the same problem that we have with other intangibles, we just don't see much value for this marketing-related type of intangible assets. Another category are called customer-related intangibles. This is information that we've gathered by interacting with other parties. So consumer lists, customer relationships that we've developed, order backlogs, so we know who's buying stuff from us and when they want it. All of these things provide information about our customers, and they can be sold. Matter of fact, it's sold quite often. Companies that are in a financial fix will sell off their customer lists to advertising agencies. None of us like it. We don't like being on those lists, but they're big business. That information is worth a lot. Now, again, the company who created it probably will never get to record this intangible asset. But if I buy it from somebody else, or if I buy out, say, the medical practice, and I get this list of patients, then I can figure out what this is worth. I can figure it out because I paid $1 million for this practice. It's got assets of $500,000. So this customer information that this other doctor or this set of doctors has built up, that's what I'm paying that premium for. And that's what they're worth. So that's where we get most of the value of these kind of assets, is by buying them, not by actually making them ourselves. Now I want to be really careful here to make an important point. These assets have value. They exist. Because of financial difficulties in coming up with estimates, I don't have them on my books. But that doesn't mean they're not important, not essential for businesses to make money. They are. They're very important. Reputation and company name and logos and all that stuff. There's a lot of value there. Employees and the knowledge that those employees bring to our business, very important. I just can't quantify it. And if you remember our discussion about both the income statement on the balance sheet, if I can't quantify something, I can't put it on my financial statements. So don't be confused with this. We're not saying that these aren't important or not valuable. We're just saying that from a financial perspective, I don't know what they're worth, so I can't put them on my books. Let's talk about another type. These are artistic related. So literary works, music, paintings, plays, movies that have been produced, etc. all fall into this artistic related works category. And the most common example of these are copyrights, since copyrights tend to protect all of these works. They're definitely limited life, just like customer relations are limited life. Eventually those customers are going to disappear if we don't maintain them, so the list I have now goes away. Same thing here. They're limited legally to the life of the creator plus 70 years, so that an author can hand off his or her work to children and grandchildren. Typically, though, the estimated service life is much shorter than the life of the artist and 70 years. It's very rare to see a movie or a set of books that will be valuable that long. I mean, there are exceptions. Think about Shakespeare's works and plays. We're still using them and still paying for them. Not because of a copyright anymore. That's long since expired. But they've retained their value as a work of art. And they're kept. I mean, you can think of famous artists and famous sculptors whose works haven't faded. They're still worth quite a bit. But for most individuals producing these goods, there's just not a lot of value that's going to continue for that long. So legal protection provides quite a long life cycle for these assets, and we can depreciate over that whole time if we want to. But typically we would think, oh, 5-10 years, and then this is going to fade. We're not going to see it after that. Next are contract-related intangibles. These are assets that we've generated with our contractual relationships. So franchises, licenses, permits that we've gotten. All of these kinds of things are part of contract-related intangible assets. So if I open up a Kentucky Fried Chicken or a Krispy Kreme, I pay a lot of money for the right to be the only person to operate that store or that restaurant in that area. And that's what I'm buying here with the franchise, is the right to represent the company and the area, the space that I get to operate in, and no other versions of this restaurant or this business get to be in that area. Usually they're classified as limited life, and we amortize them away over the time we think the license or the permit is actually going to do us some good. The only exception is a franchise. Franchise is sometimes labeled as indefinite because we assume the parent company will keep up enough advertising for us that we don't have to worry about the value of it going away. Next are technology-related intangibles, and the best example of these are patents, but we're talking about innovations and technical advancements. Medicines fall into this category, other kinds of chemicals fall into this category, clever ideas and inventions fall into this category, and it's fun. I don't know if you've ever done it, but you can get online and look at some of the patents that are out there filed for protection of different individuals. There's some hilarious stuff that people have patented, but be that as it may, a patent has a limited life because it's only over a certain period of time, and then it fades. The patent goes away and other people can copy our idea. Now, we talked about a lot of conceptual information over the last few minutes, and it starts to get a bit heavy after a while with no journal entries to liven things up. So let's take a break. When you come back, we'll talk about a couple of specific intangible assets that have caught a lot of flack or have changed the face of business, and then we'll discuss a few other issues related with intangibles. We'll see you then.